Hey everybody, still here. Daily Market Pulse here for Thursday, June 19, 2014. Stocks were mixed. They essentially came off their lows. They paired their losses for the most part, finishing mixed for the day in much, much lower volume, which is fine. Profit taking, no big deal. A little bit of a pause following some aggressive buying. Everything's still fine on the long side overall. No major concerns right at the moment. Here's the Dow Jones. You can see looking to still break the recent highs and still going higher in this little scoop formation with a support at the 20 as well as near the 16,700 area. No big deal there. The S&P 500 looks very similar. Came off its lows, came a little bit higher. Bollinger Band opening room to go higher. Still 2,000, still a target above that huge round number of support. 20-day moving average, 8 moving average as well. 1940, 1945, and lower into 1925. Nasdaq finished slightly in the red, so it gapped higher, went into the resistance pivot area, 43.75, retraced, came off its lows, and finished just barely and marginally red for the day. It's looking for a breakout to the upside and for higher numbers naturally in the short term to long term as well. TSX fairly neutral, a little bit of a pause, nothing big deal. Everything's been trending. A lot of green candles though, tons and tons of green candles, but there's not huge green candles either. There's some small ones where they're sort of meandering their way. It's been overbought for quite some time. At some point we're going to have to see a pullback, I would imagine, but right now everything's still, it's all systems are go. A little bit of a pause here. That might be a little bit of a signal, a little bit of a red flag, pink flag anyway, that things may be pausing to go with a pullback, so just be cautious of that. Let's look at the US dollar, Canadian dollar at this point. Looking like it's breaking support at this point at 108 and a quarter. Looking for some downside here. Might be a crack and snap, however, so watch for an immediate rebound to the upside. That's possible. Otherwise, we're looking for much lower levels. It is oversold. It's been oversold for a while. No sign of a rebound just yet, but just watch because this is the first day following a break. So there could be a snap right back, so just be cautious of that. The euro continues to look bullish, going higher, breaking above the 20, looking to go higher still, so look for higher levels through 136.50, maybe 137. Treasuries are continuing neutral between the 20-day moving average and the 50-day moving average at the bottom of the current rising channel. Just right at 135. Below 135 takes you to 134. Below 134 takes you much, much deeper. Above 135 takes you to 137. So right now, neutral with a slight bias still to the long side, but quite frankly, it's hard to say. Neutral for sure, because the longer term intermediate is still to the upside, but it's a little iffy if the markets go higher. This is likely going lower. The yen still looks bullish, holding at the moving averages, the 20 and the 50, with room still to the 200 or higher. I like that. Gold, we said, could break out aggressively. It did. Some $30. It went into 13.20. You don't see it here. Why, I don't know. But it's a huge, massive green candle. Come on now. Where are you? There it is. So essentially you can see the huge green all the way into 13.20 at this point. It's not going to flash itself. So it came through a 1280, through the trend line, through the 200, through the Bollinger Band into 1320. So said that this was looking bullish. It was pausing. To get through all of this, it needed to be aggressive and strong. And guess what? It did. Silver is the same thing. You may not see it. We'll find out here. But silver did the same thing, broke aggressively up and through into the 200-day moving average, looking for higher levels. It went into 21, essentially settled just below 21 and right at about the 200 above the trend lines in 2050. 2050 will be support. I doubt it comes back to 20. Crude faded like we thought it would. It didn't quite come down to 104.50. Came closer to 105.11, I believe is what it was. It still has a shot of going possibly lower. The blue line at the top there, that's not a trend line. That's more of a measured move. I'm looking for the drop down low into that area of 104.50 to 105. Hasn't quite accomplished that. It's holding the 8 moving average currently, but I still think there might be weakness enough to come back lower, and we'll find out. Otherwise, we're looking for 107 to 108 once again. Small caps gapped higher, finished higher, even though there's a red candle. It's a little bit of a hanging man-like formation. A little bit of resistance up here where the evening star formation was back in April, but I'm not that concerned. The measured move still says 121, so we're still looking for higher. The VIX did not fade near as hard as it did before. In fact, it bounced briefly, but not much there. Even if it goes higher, the markets go sideways. There's still not a lot to be concerned about here. Okay, that covers that.